Hi, this is Chris Heineken bringing you a new installment of our Insight Track. And the goal of the interviews here is to bring market trending from thought leaders in industry and technology around analytics, machine learning, and how companies are evolving to be more data-driven with systems of intelligence. And joining me today is Jeff Green, who is the global lead for mortgage and lending at Salesforce. And before we get going, I want to say thank you, Jeff, for working with us to promote all the thought leadership around Salesforce and analytics and machine learning in the mortgage space. It's been great to team up with you. And maybe to get us going a little bit, can you talk us through your focus at Salesforce and maybe a little bit of how you got there?
Yeah, appreciate it, Chris. First of all, thank you very much for having me today. Appreciate the work we do together. Appreciate Atrium as a firm. So I appreciate being here today. My role as the global head of mortgage and lending here at Salesforce out of the go-to-market team is I work with our install base, both non-bank and bank, as well as, lending partners even outside of mortgage on how they use our product across, the end-to-end loan life cycle to deliver value for customers, increase pull-through, and just crush it when it comes to the KPIs that drive their business. I would also say I work closely with our product management team to ensure that what we put in products like Financial Services Cloud, I know we're going to spend some time on Financial Services Cloud today, has the innovation in it and a release schedule of innovation in it that really matches what customers need to count on us for to be their innovation arm in addition to what they need right on the line in the midst of the work that they're doing. And then, the last thing that I would say is, I work, I'm the beat on the street on what's happening, both with our, internally with our sales teams and our solution engineers, and then also more broadly on the point of view that we need as a company around mortgage and lending. So I lead that point of view. I work with our product team and I hustle on the line. I used to get on a lot of planes. That's changed. I'm on the line a ton with our install base. So I've been here about 4 years. Principally, I ran the FHA transformation program out of FHA, Department of Housing, Urban Development, in 2008 during that crisis. Spent some time at some services firms, spent some time at some other software companies, and now have been here as a usual suspect in the space, running on technology and innovation and disruption in mortgage. So appreciate being here with you today.
Well, it's an incredible time to be focused in the mortgage space, right? And you have a front row seat and have a highly impactful role in shaping the direction of FSC for mortgage. I know there's been a lot of thought put into the product itself. Maybe you can talk a little bit about how that has evolved in the reaction from the customer base.
Yeah, I appreciate the question. So Financial Services Cloud is, a tip of the cap to the chili peppers, right? It's sort of ready-made solution for financial services and sub-functions and sub-industries within financial services. So what started in wealth management around a broader data model and found its way to commercial and retail banking, we've rolled out insurance functionality and we've rolled out mortgage functionality. Probably, I think about a third or fourth release is where we are. I have to tell you, clients really appreciate having innovation in mortgage and lending coming from enterprise and appreciate the amazing sort of talent and focus and methodology that we put around our release schedule and our release cycle that adds more and more value to what they're doing. The idea of customer experience being born out of CRM really resonates with people, and no place like mortgage or lending in particular is that more germane. So the idea of having that record of record from a customer experience perspective, the loan origination system is the loan, the record of record on loan making. But when it comes to customer experience and when it comes to owning that end to end, all the way from top of funnel and with that first touch and seeing that all the way through and ensuring there's symmetry, ensuring in the case of our product, a real emotionally intelligent approach. You want to use our residential loan application out of FSC, or do you need bidirectional sync to your own POS? That's good. ensuring that that loan officer experience and that bidirectional sync to loan origination systems, whatever loan origination systems you might use, or whatever API-driven functionality you might need around VOE or VOI, or what you might do on product and pricing. Again, we're that connectivity, we're that glue. I would say, Chris, the reaction, I think we're getting a little bit of a disruptor tag in the industry for being one workbench across customer experience and borrower experience and loan officer experience in a world where there's traditionally a bunch of piece part fragmentation in that. And historically, and I'm sure you've seen this, sort of grown up sort of super fragmented and decentralized. And I think a lot of folks are appreciative of the core values we bring to the work, and then the connectivity that we can enable by having a lot of, again, a residential loan app, a more robust data model, doc upload, business API framework, a lot of connectivity between our communities product and our FSC product. Just a lot of innovation in and around there that I think people are getting pretty excited about.
Well, on the innovation front, you mentioned, you know, Salesforce is seen as a bit of a disruptor in the space, and obviously there's a lot of change going on with the pandemic. So over the last 6 months, as we've not been on the road, what would you say, what are some of the opportunities or the challenges that you're seeing across the industry that companies are grappling with?
Yeah, I appreciate the question too. So I think, you know, where we started in the pandemic, and I did mention also I spent some time at SBA in my career, about 4 or 5 years there. So all of a sudden someone read that, machine learning, if you will, read that on a resume, and like, you know, PPP. And I do know that program, and I do know those people, and I do know 7A and 504 lending. And so in the beginning of the pandemic was a lot of the work around 7A lending in particular, and really, you know, E-Tran and using that pipe for the PPP program. But what I find, and sort of rapid intake, you know, hit this book before that subsidy or that amount of program dollars run out kind of view of the world. And the reason why I think that's important is because us on the mortgage side who lived through '08 and Hamp Harp sort of lived through the, okay, get your arms around forbearance quickly. And I read it back to you that way because what's important about that is when they decided to sort of have a holiday or kick that forbearance can down the road for a year and let people kind of move their terms to the back end of their loan, which I think helped a lot of people, it does what I call create this slow fuse though. There's a burn over there on what happens with some people's jobs in the economy and what happens when that sort of runs out. So the first thing that we focused on was a forbearance solution, an end-to-end forbearance solution. Definitely, we saw more people just using Omni and using bots and using capabilities to kind of push automatic feeds to the back end of the loan life cycle and just kind of move your loan out. But I want to put a placeholder down that we'll come back to that. And then as I'm sure, and you and I kicked this around a whole bunch, this refi boom, given where rates are, this net new origination, for whatever reason, COVID getaway, flexible workforce policies making you move, going from renter to homeowner, the confluence, I read it back like this. If you have a job, you're either refining or thinking about net new origination for what it means for building wealth for your family. If you don't have a job, then you're probably in some measure of forbearance or where PPP affects you, or you're affected by your business being in and around that. The last thing that I would say, though, that's more and more, and again, I'm an FHA guy, having lived through that, you know, during the '08 crisis, is the emergence of social justice and the emergence of thinking through how everyone can build wealth through housing. And it is past the refi boom, this is where everything's going to be. How do you get net new people? If you're really a housing geek out there, you really care about this notion of first-time home ownership, minority home ownership, and how to give somebody the keys to a new home and have them build a journey-based relationship with your institution as they step up different things in their life. And we can go on for a long, long time, Chris, about
Hmm.
who traditionally builds wealth through housing and who doesn't. And I'm recommitted, and the core values of this company drive a lot of the thinking and give wings to it. I'm thinking about helping people build wealth, generational wealth through housing. So I think that's a topic for another day, but it's starting to really get a lot of people's attention as we think about emerging markets and we think about life past the refi boom.
It's
Long answer,
incredibly
but I
interesting.
think the right one. You know,
It's how does all this disruption kind of create purpose for the industry broadly? That's fascinating. And, you know, all those different trends that you mentioned coming together at once. I don't know if this feels like maybe more disruptive time than '08. It's kind of apples and oranges, but wow, it feels like it's on that order of magnitude for this space.
yeah, I tend to agree. And I think the same way that we've all had to watch COVID and positive rates almost have this tape delay function to them where something will happen and then it feels like it's downstream that you start to see that bear
Right.
out, which is, I think, just new for a world that we all live in where we get instant stuff and we instantly know this and we instantly know that. You know, that default rate is on the uptick. It's a slow rise, but it's on the uptick. And when you think about forbearance and people that have moved terms to the back end, the real hope is that things open up and that you know, there's a soft landing to all of that. But I do think that there continues to be just a longer arc of uncertainty that does make you not be able to move past the '08 analogy too fast. Every time you think you can move past it, you kind of can't. So I tend to agree with you that I'm not sure that this is over when it comes to housing and the implications for homeowners. I think this notion that where in '08 it was like housing was the culprit, in this instance, housing seems to be the economic recovery engine for so many individual families. But I think there is still some more chapter to that story that has to play out with time. And as I mentioned before, the long tail of that, or the tape delay notion of knowing how that plays out, is hard for people. And I have a lot of empathy for folks that live in great uncertainty when it comes to that.
That's fascinating insight, Jeff. Maybe just
Yeah.
steering it a little bit on the technology landscape, like where you and I spend a lot of time with companies. Obviously, we do a lot of advisory work from a technology standpoint. We at Atrium, we find ourselves helping companies kind of reinvest in their existing systems of engagement and systems of record. And I know that for the mortgage space, that's kind of, it's at an interesting crossroads. As you mentioned, you're kind of a disruptor in this space. So we watch companies making these evolutions and investments to going from engagement systems to how do I make my technology smarter and work for me? How do I put data, machine learning, and AI to work for me? Anything that you're seeing as trends or that you're optimistic about as companies are entering in this arena around intelligent systems in the mortgage space?
Yeah, thanks, Chris. And again, I appreciate the work we do together. And I know of Atrium's reputation, and again, it's a fun time to be partnering on big ticket stuff. And I do think when you add the COVID mix and fulfillment challenges and this notion of a remote workforce in lending and loan production in particular, in a world where where a manager's used to coming out of their office and seeing everybody in their cubes or in their workspaces, I'd say disruptive theme number one is fulfillment in the midst of crisis has been fascinating. You know, increase in volume or not, that's an ethos change in that business. And like you said, and we all know this, and I'll just double click on it. If you lose on borrower experience, you know, you're going to lose in mortgage. If it ain't easy, someone's going to find someone else who makes it easy for them. And we all know that have been around the block. So how to ensure borrower experience is crisp and first rate, and then ensure connectivity through AI or digital engagement or end-to-end to ensure that value chain doesn't have cliffs when it comes to sub-function or value chain handoffs that leave the borrower in the dark, leave them really concerned about losing a lock on a rate, especially in a time that's money out of somebody's pocket. I have also seen, again, in this entire COVID experience, where a lack of borrower experience or a lack of an omni approach or potentially being on hold for 5 or 6 hours or whatever is leading people to take 20 or 30-year relationships they have with some institutions and throw them out the door overnight, which is unbelievable that we've done all this work together over all this time. And again, mortgage tends to be a little bit more transactional, so this is more of a little bit of a broad comment on an end-to-end relationship. But you're seeing a lot of movement in the industry where borrowers are just not comfortable that it's pretty obvious that behind the scenes, you don't have a scaling function, or you don't have the tech that allows you to do more, or you can't extend past where there's huge spikes in X to let the tech increase the throughput and increase from a KPI perspective, the productivity of one worker to many loan files or whatever that input is, just because of the crazy nature of our times. So right now you're going to see, when you get into fulfillment and when you get into end-to-end closing things, who's made the right investments. And I like the way you said that, Chris, who's kind of refactored or reshaped that infrastructure they have, making a bet on scale, and then look what happens. And now here we are, either capable of that or not. And I think that's kind of the world that we're living in right now, is who placed an early bet, who's getting on the bus, who's fighting to hold on to an old bus. Around and around we go on that. But it sure has been interesting times.
Yeah,
for sure.
Yeah. So as you think about the scale opportunities, like unprecedented right now, and are there areas of the mortgage space where you're seeing machine learning and AI become a real thing? Because that's one of the things that we work with a lot of our customers on, is they understand it kind of at a conceptual academic level, but sometimes it's really challenging to find the use case to get started that's really clear. I can derive signal from my data. I know what to do with it. I can create action. Are there certain use cases that you're seeing out there that you're particularly positive about as far as the impact machine learning and AI will make on mortgage?
Yeah, I would say just quite specifically, when you put more data in the financial services cloud mortgage data model that's got more 1003 data attached to that, and that counterparty data in a residential loan app is driving AI, what's happening is there's more counterparty data points that are automatically queuing things, automatically teeing things up, and automatically putting borrowers on journeys that align with the size, scope, or life event structure that is happening with that particular borrower or that particular customer. And that's happening.
Sure.
And the place of where different folks' journey is in all of that is going to be a function of a lot of things that are Salesforce specific, or company ethos specific, or innovation specific. And there's going to be a big old Venn diagram that someone like you, Chris, can draw that the light bulb goes off for the customer. And that's why you're great at what you do. But the net of it is that the tech's there now. The referral or the internal lead can move. Again, record of record from customer experience perspective. Once that record of record can move now, whereas maybe 36 months ago, that was a bit of a pipe dream for people. I'm going to have a data-rich record that is the latest view of what's happened with this customer, fresh off the presses, moving to the next opportunity or moving to the next line of business, sure I am, right? You know what I mean? People never believed it, but we've worked very hard at that. And for the AI geeks on the call, and I'm one of them too, more data fields, more relevant data fields, more workflows, more prepackaged flows, more cultivation about what is next for that borrower, more algorithms that are driving insights off of patternization. Again, one of the benefits of being financial services cloud that has functionality industry-wide and then is now coming around on mortgages, we got a lot of patternization in wealth. We got a lot of patternization in commercial retail banking, patternization in insurance. And a lot of the particular componentry on a lightning scheduler that's tied in, or some of these functions that are at FSC at the parent level, you think of servicing, for instance. These things that are ubiquitous to a whole install base that is running around financial services cloud. And, everybody throws around 70-30 or 80-20, throw around whatever you want. There is some core componentry that everybody gets to benefit from. And again, that's why, Salesforce tends to be a super helpful enterprise partner. In the case of mortgage, we've been very specific. If you love that POS, go in that direction, bidirectionally sync, do what you need to do. Use our building blocks if you need that through and through. But back to your question, on a more robust data model,
right?
AI, that enables AI in a way that is differentiated for sure.
Yeah, and it sounds like linking machine learning AI to some of the scaling challenges that mortgage companies are facing as a way to unlock productivity feels like a tremendous opportunity. I know we see, as the data sets grow, tremendous opportunities to not only identify descriptive analytical patterns, but predictions as well to help really fuel that productivity. And as you mentioned, kind of the borrower experience, it has to be fast. And so I know we collectively in the market are thinking about how we make that happen for mortgage companies.
I would say last thing here, Chris, that I would just mention it. And I mean, we could kick this around and see if it's a one-to-one everywhere else, but in this instance of mortgage, in this use case, productivity is a direct correlation to borrower experience in a weird way. Because if I'm waiting for a response or I'm waiting for you to get to my file, that is directly affecting where I feel like the lights have dimmed on knowing and having a good sense that things are flying through the value chain. So it's weird, but that's why our tech is so good. It enables borrower experience, but it also is the workbench for productivity and crushing KPIs. And in this instance, those two things really have connectivity in a way that maybe in some other industries they don't, but they sure do here, for sure.
Last question for you, Jeff. As you think about the opportunity and you talk to a bunch of companies in the space, anything that, any advice you'd give for companies that are struggling on getting started on this journey of investment in the next set of technology and productivity and machine learning? Anything that, any roadblocks that if you could wish them away, you'd wish them away for companies?
I would say it this way, that what makes me proud, I'm very proud to work at Salesforce for a number of reasons. I enjoy the company. I enjoy our core values. I enjoy the people. I enjoy our relationship with our customers. I enjoy the ecosystem. I enjoy it all. But what I would say is that folks have to be very careful about doubling down on innovation in companies that might not have that long view and that ability to scale and that continued investment in innovation over a huge horizon. And I've seen some folks lose on that, where, they went to a company for, like I said, we're a disruptor for enabling end-to-end, and maybe in that traditionally sort of fractured ecosystem approach to it, they went to innovation in one particular sub-slice or quarter slice. And they put a ton of data, they put a ton of resources, and they just need a lot out of that. And it's like, I had an old colleague who I respect very much, who always mentioned the analogy of the big old aircraft carrier, and wanted to be in the middle of it and wanted to be counting on the aircraft carrier, especially in times of crisis. And Salesforce is a real big innovation machine. Innovation's at our core, and you can count on us for releases having more and more functionality in it. And we've got a really good listening post and relationship with our customers to hear more about what our customers need on the back end of innovation in their areas. So that would be my only piece is, and I'm not, it's just a broad statement, is where have you doubled down on where you think innovation is going to come from? What do you get with what you pay per month where you can count on that innovation? And I think we got a pretty good track record of, as a company, of being someone you can count on for a continuous stream of innovation in mortgage and lending and just writ large when it comes to customer experience.
Very good, Jeff. So don't make a technology bet on a dead end, right? Have a long vision about it, right? As far as
we've all seen that. We've all seen that before. Yeah, I saw in 2008 lights go out and some stuff, and it's just like, what are we going to do now? You just don't want to be there on that, and the ecosystem economy too. I mean, you guys crush it for us, and the familiarity with our products, the consistency with our approach. 3 releases a year. Sometimes that approach and the familiarity with how we go about our business even brings that level of talent from the ecosystem more closely into view. And I think your company is an example of that, which is, it's not just that our componentry is tight, it's that the people who can go wire that componentry or configure that componentry also can make a bet on us and run with us because they know that works in congruence. So again, I love what I do. I love this space. Keep your eye on social justice and building wealth through home ownership.
Let's reconvene in another 6 months to see how the story unfolds. Jeff, I can't thank you enough for joining us today. We learned a ton from you, and we will be in touch. So thank you.
You got it, Chris. Thank you very much. Appreciate it. Take care.
Thank you.